I see a lot of people asking the same question in the Q&A, asking about their mics in their videos. And the answer to that is that we are going to be keeping mics and videos off for participants for now.
All right, so before we're gonna start, I'm gonna just remind you our little disclaimer that annual first daily market forecast does not provide personal investment or financial advice to individuals, or act as personal financial, legal, institutional investment advisories or individual advocate for cash or sale any of the security or investment or to use any of the particular financial strategy. In other words, uh, does those don't take those advices as personal advices or personal financial advices to you specifically. And we are just this webinar uh, wants to get to know you, to get to know better the algorithm and how it works, and uh, feel free to ask us about it. And we're gonna have a few forecasts about what's gonna happen next in the next month, and I think it's really interesting. And we're gonna see what happened before, what's gonna happen in the near future, and we're gonna see it all in a few minutes. I think we can start.
Okay. Anastasia, the floor is yours. Let's
All
start.
right. Okay. Hi, everybody. Thank you so much for joining us today for the I Know First webinar. My name is Anastasia Makuyev. I'm a quantitative investing analyst here at I Know First. We're going to share a little bit about who we are and what we do, hopefully in a way that's easy to understand and as exciting for you guys as it is for us. So first and foremost, I Know First is a tech company, but at our core, we're all about making sense of the stock market through AI. We believe that quantitative trading shouldn't be limited to the world of Wall Street when we live in the age of information. Our main tool is an algorithm that learns on its own. It looks at a huge number of stocks, indices, and other financial data, and it predicts where they're going. So you can think of it like a weather forecast, but for the stock market. I Know First is currently being trusted by the world's leading hedge funds, banks, family offices, and investment houses, as well as private investors that are using AI to identify opportunities in the market on a daily basis. Here to tell you more is Yaron Golger, our CEO and the co-founder behind I Know First. Yaron is going to dive into the details about our company and the innovative algorithm that drives our predictions. Yaron is also going to share some of our recent triumphs that we're really quite proud of. Also joining us is Ben Rubin, the head of our advisory service. Ben is going to break down exactly how I Know First can benefit you. We deal with over 10,000 assets, so there's a lot to talk about. If you're new to investing or if you've been around the block a few times, Ben is here to give you some unique insights that can help make sense of all of it. After Yaron and Ben have laid everything out, we have a few special surprises, including sharing our top stock picks for 2024, all chosen by our AI-powered algorithm, and a few more surprises we're going to reveal towards the end of the Zoom. So you can settle in, we'll get started, grab your coffee. We're here to answer any questions that you pop into the Q&A chat and hopefully offer some valuable insights into the world of AI-driven investing. As we're getting started, it would be great if everyone could pop into the chat, not the Q&A, your name, where you're from, where you're zooming in from, and maybe what time it is over there.
I'm going to start. My name is Yaron. The time here is 6 o'clock. Okay. Great. Um, so, um, I'm going to start to talk a little bit about INO first, and then I'm going to deliver the mic to Ben, that prepare really good, really interesting webinar. So basically, INO first. We are AI, as Anastasia said. We are AI fintech company. Our main solution is a predictive algorithm that generates daily prediction for the financial market and identifies the most promising investment opportunities. We are utilizing artificial intelligence, more specifically machine learning, deep learning, artificial neural networks, and genetic algorithms, basically to predict the financial markets and to identify opportunities. Our predictive algorithm is generating daily forecasts for over 30,500 assets from different asset classes, equities, which is our main focus, ETFs, sectors, commodities, currencies, cryptocurrencies, interest rates, and also world indices, with daily prediction for multiple time frames, long-term, mid-term, and also short-term. This is a global solution. We are covering over 50 global stock exchanges around the globe, including the stock exchanges in the US, Canada, Europe, and basically most of the stock exchanges around the globe, from India to Japan to Korea, Australia, Hong Kong, and more. The INO First predictive algorithm was developed by a team of AI experts led by Dr. Lipa Reutemann from the Weizmann Institute of Science in Israel. And besides Dr. Reutemann, we have in our co-R&D team PhDs, AI and machine learning experts. We have math professor from Tel Aviv University, as well as employees with the background of computer science, data science, math, statistics, engineers, and also people with the IDF veterans, specifically from the intelligence unit. The INO First predictive algorithm is being trusted, as Anastasia said. The predictive algorithm is being trusted by the world's leading hedge funds, family offices, investment houses, and also banks and high net worth individuals that utilizing the predictive algorithm basically to identify opportunities in the market on a daily basis. The solution that you're about to see has received several awards from different entities around the globe, including from UBS, Entity Data in Japan, and also we have received the Geneva Wealth Tech Award Forum as the best international wealth tech solution. It's important to say that the algorithm is also being used by retail investors from all around the globe that utilizing it in order to support their investment decisions. Yeah, here you can see several awards that we have received over the times. The INO First predictive algorithm has been published in different media outlets around the globe. And basically, we are providing two main solutions to our clients. On one end, we are providing daily prediction that our algorithm is generating, and in order basically to help them to identify opportunities every day. The algorithm is generating the forecast on a daily basis, and every day our clients are receiving the forecast with the best opportunities that relevant for the very same day. Ben is going to talk about that, but basically the daily forecast include different time frames, short-term, mid-term, and also long-term. And the idea is to basically to follow the AI algorithm suggestions and to utilize those suggestions in order to outperform the market. On top of it, we are also offering tier 2 solutions when we basically converting the daily forecast for a portfolio. We have developed several systematic trading strategies, AI-powered strategies, that basically choosing the building the portfolio on every month, and also conducting the rebalancing. And we are going to discuss it as well during the webinar, and it's very interesting session as well.
I think we lost connection with Yaron. 1 second.
Yeah, it looks that way.
All right, I'll take it from here until you're gonna join up again. We have 3 components that our algorithm can focus on. One is to actually identify the most promising investment opportunities in the markets, in different markets. We're going to see examples for that right in a few slides. It actually can give us the best opportunities for 6 time frames, from 3 days to 7 days, 2 weeks, 1 month, 3 months, and 1 year. And this is one main part of our algorithm. The other one is actually providing a stock market intelligence. We're actually gonna see a specific forecast about that market intelligence. We can see which leading indices and sectors are going to be in the next month, in the next few weeks, and by that we can actually focus on those specific sectors. Beside that, the algorithm can tell us not just in the US market, for example, it can tell us globally where are the best market to be, which is the best market to be in, and in that market, which sector are the best, and even stock picking from specific sectors to be on the right spot, on the best place to be in each investment universe. The third component is the portfolio optimization and the portfolio construction, which we can actually, you can provide your own portfolio, and the algorithm will process those stocks or assets and give you a feedback right back if those assets are good to hold. Maybe you should buy them or even sell them. So those are the 3 main components in the algorithm. Let's see if Yaron is back. I see it's not yet, but we can continue. Second. All right. So how do we do it? How the algorithm actually works? First, we are taking a daily data from the market, from all the data such as stocks, prices, volumes, in interest rate prices. It's actually taking all the information from the market on a daily basis and holds it in a 15 years database and that we have. After that, the secret sauce is in the second part of the process, which the algorithm actually built this artificial network, or it's building a complex network that holds between different assets. So we can see, and on a daily basis, this algorithm is actually building this network, and we can see some that assets are affecting others every day for different time frames. And we're gonna see some of those connections later on. We also use a few other models of artificial intelligence, such as deep learning and machine learning and genetic algorithm. All those are helping us to create a 6 time frame forecast, as I mentioned before, for different stocks, ETF, commodities, currencies. It's actually the same algorithm is actually going out through all our assets, different asset classes, and connects between them. and there's a lot of hidden correlation that the human eye will never see or notice, but our algorithm actually can identify them and bring this complex network uh, on a daily basis. One second. I'm trying to bring back here on. Sorry, guys. One second. I won't get into the the technology too deeply, but we are using few AI models, as you can see, such as genetic algorithms, artificial neural network, deep learning, machine learning. But the main issue or the main thing I think that is really interesting about the algorithm is that it can identify the most predictable assets and divide them from the non-predictable assets. So not every asset that we are checking in the market is predictable. So the algorithm knows to divide those assets, and more of that we will see that the predictability, which I'm going to talk about right in the next slide, the predictability factor is really important for the algorithm and for the assets that we're going to review. And let's see actually an example how it looks. We can see from the left to the left, you can see the forecast. The forecast comes in a section of a heat map. As we can see, the green cells represent long position, while the red one represents short position. We can see the date actually the time frame of the specific forecast in the top of the forecast. For this example, we can see it's a forecast for 3 months. And then in each and every forecast, we have the symbol or the little squares that we can see here to the right. So if we're looking at, for example, XOMA, that's the symbol of that stock, we have two indicators that help us to focus on the best assets that the algorithm is actually generating. For example, with XOMA, the signal is the number that's in the middle of the square. The signal is actually the predicted movement of the asset or the potential movement of the specific assets. It's the index is internal index. It moves from minus infinity to infinity, and we are it's actually telling us what's the potential movement that the asset can do. It's a very important indicator. It's one of the two most important indicator. The other one is the predictability that you can see on the bottom left square that we can see 0.3. This is Pearson correlation measurement. It moves from -1 to 1. And this indicator is actually telling us how good the algorithm can predict this specific asset. We are looking for the highest number that we can find. For example, 0.0 represent 50% probability that the asset will move to the predicted movement, predicted direction, sorry. 0.5, for example, it's about 75% probability that the asset will move to the predicted direction. So while we're getting the forecast, we will look for the highest number in the signal and the predictability, and we're gonna see how important that is in the examples in the next few slides. So how the forecast looks after you're signing in and get the forecast, you get those 6 time frames that we can see here: the 3 days, 7 days, 14 days, 1 month, 3 months, and 1 year. In each and every time frame, we have stocks to buy, stocks to sell. In this specific forecast, this is the top 10, top 20 package. And all the top packages, we have the S&P 500 index as well, that help us to know the direction of the market itself. So every morning when you're drinking your coffee, this forecast is sent to you, and you can go through it and see all the time frames, and you can switch from the shorter time frame to the longer time frame by clicking on the 1, 3, 12 months that you have in the bottom left of your file, or go back to the short time frame of 3, 7, 14 days that you can see on the left. So this is basically how the forecast looks like. I can see Aaron is back with us. And
Yes, I'm here.
all right, so let's see a few examples from the recent days. And what are we seeing here is a 3 days forecast. I'm going to explain what we're seeing right now. So in the top left of the forecast, you can see it's 3 days forecast. It's generated on December 12th, 2023, and this is actually the best 10 assets that the algorithm picked for a 3 days time frame. Okay, we can see here to the right the performance of those stocks, and in the bottom we can see the INO first average of those stocks comparing to the benchmark, to the S&P 500 that made the 2% in that specific in the same time frame. We can see the algorithm picks in this specific forecast is the top forecast, for example, stocks from all around the US market. I mean, from the entire US market. We can see BITF, which is a finance stocks, and Upset as well. We can see Snap that belong to the tech sector, and RDFN that belongs to the real estate. And we have a variety of stocks that the algorithm picks from the entire US market. We can see the signals that I talked before that's in the center of each and every square. And the best, the whole, or their highest signal is in the top left corner. And we can see it's going down to the right, and the signals are getting lower and negative if we're going to the bottom right corner of the forecast. Also, we can see the predictability that I mentioned before on the bottom left of each and every square. So if we are going forward for a 7-day forecast, as we can see here, we can see the signals are getting stronger, and also the predictability signals also getting stronger. And that's actually something that goes around with all the time frames. Is as you go further in the time frame, or the longer the time frame is, the signals and the predictability levels will be higher. And that's why we are usually focusing or suggesting to focus on longer time frames, such as 3 months and 1 month. We're going to see examples for those time frames as well. But here we can see a 7 days forecast that generated on December 7th and held up to December 14th, as we can see here. And you can see all the performance to the right and the average of this specific group of stocks. And you know, the people or clients sometimes tell me, yeah, the market goes up, everything goes up, everything you touch can go up or did go up. But the thing is that you always compare yourself to the benchmark, and that's how it works in the investment universe. I've been a financial advisor in a big bank in Israel for more than 7 years, and this is how you're being measured, and everybody measure you. You've always been compared to the S&P or a main benchmark that belong to the same investment universe. So the average of those stocks made 15%, and if we're looking on the S&P 500, made 3.7%. So we actually succeeded to beat the S&P. And if we're jumping even to the 14 days, we can see again the signals are getting higher, and the predictability, which is important, is getting higher as well. And we can see the different universe of stocks that we have here, from CLSK, which is the financial and clean energy stock, or Under Armour. We can see it from the consumer stock. We have a variety of universes that the algorithm picks from. And You can see again that in 14 days time frame, we also succeed to beat the market. And also the algorithm gave us the right direction by pointing on the direction of the S&P 500, which comes with the top packages, as I mentioned earlier.
Yeah, this is a really good point, by the way. Usually we're ignoring that. We're ignoring this S&P 500 forecast, but it's really powerful market intelligence tool that helping us even before picking the stocks to understand whether the AI algorithm believe that the market would be positive or negative. We're going to see some examples later on. By the way, we see here, as Ben said, a very interesting variety of stocks, from tech stocks to Bitcoin-related stocks to consumer, retail, but the average here is very interesting. And this is an example of the top 10 package that's available on our website.
Yeah, and if we're going forward to 1 month forecast, again, we can see that the predictability level is much higher in those time frames. And that's why we are suggesting to focus on those specific time frames, the longer time frames. We can see CLSK with 177% in 1 month. We can see a lot of other stocks that made a really interesting return. So this is the 1 month. It's generated actually 1 month ago on 7th on November and held by today. And again, this is a passive investment, which means we bought the stocks on the November 17 and held it just by up until the last trading date. And of course, those actually returns can be more optimal if we're checking the algorithm every day or every week to see that the stocks are still located on the green side of the table and the higher spot of the table and has high predictability level and also high signal. So this is the 1 month, and to the investor that loves or prefer longer time frames, such as 1 month or 3 months. They don't get into the computer every day and check their stock on a daily basis. Just swingers buy the stocks for 1 month, 2 months. We have the three months time frame, which I really like and recommend. And also here you buy the stock and you can hold them for a longer time frames. Again, it's good to be updated by the algorithm as much as you can, once a week or even twice a week, to see that the stocks are still in the same direction and looks good. But this is an example for longer time frames investments, such as 3 months, and we even got the 1 year that we can see here, actually from last December, the 15th in December, and those are the stocks that the algorithm suggests to hold for 1 year, and we can see the returns are spectacular, actually, with almost 90% average in a year, which is amazing.
Yeah,
and the algorithm goes to both sides, long and short. Yaron is going to tell you about the short side.
Okay, so in some situations in the market, the algorithm is actually predicting negative prediction for the market. And actually, it's also very useful, even, if we are not actually shorting stocks, because it helps us to measure the risk in the market right now. Institutional investors call it a risk on market or risk off market. So whether we see negative prediction if we see negative prediction for the market, for the S&P, for the benchmark, we understand that we need to stay away from the market for a while and to wait for a better opportunity to go to the market again, to invest again. And we have seen several situations like that during this year. I don't know how many of you remember what happened during March 2023, but back then we had a very serious crisis in the banking industry, and several banks have collapsed. have collapsed. And we see here an example on the left side, we see an example of the prediction that the algorithm was generating in the beginning of March. We can see the negative prediction for the S&P 500, and we can see that the strongest signal came from the negative side. And among those tickers, we can see several bank stocks, including Silicon Valley Bank, that basically has collapsed during this period. On the right side, we can see a similar example from February 2020, when we started to hear about some mysterious virus that's coming from China, and we actually started to see the effect of this COVID virus on the market. So back then, we had also negative prediction for the market, and the assets with the strongest signals came from the negative side. And here we have two choices, as I said, or to go short on those stocks, or just to stay away from the market, because usually the market may recover after this negative trend. And actually, we started to see those negative predictions for Silicon Valley Bank and also Signature Bank on the beginning of March, and actually also on 19th of February 2023. We see here several stocks that coming from the financial sector, several banks, including Silicon Valley Bank, Signature Bank, and additional tickers that actually representing the financial sector.
All right, so not just the right stocks. It's not important to be just in the right stock. We have to consider the timing of those entering to those stock as well. And we can see a few examples here. For example, this is for 14 days. We can see a CLSK. It's actually Bitcoin related stock. But we can see when the algorithm is actually suggested to buy the stock, and we can see that it's on 1st of December. That was right here, and then the stock went up in those 14 days that we can see here, the example of 14 days, and had almost 70% in this specific forecast. So timing is everything, also of course in the stock market. And we can see WSM stock, which I don't know if any of you know that stock. It's coming from the home builders. The algorithm actually liked it for several months now. And we see the recommendation of it from the 26th of October. After a big drop down, we can see actually the stocks is jumped in the month after it. Another interesting example is the HOV stock, which made staggering 235%. This is a 1 year forecast, as we can see in the beginning or the end actually of 2022. The algorithm gave a strong recommendation of the HOV with a really high signal and really high predictability level. I think it's the highest, almost the highest predictability level, and almost the highest signal, and made a really good performance in that in 2023. And another example for that is the GPS stock, Gap. Also here you can see several recommendation if it's in 26th of September, or we can see another one 22 in October, right before big rises that we saw in the stock itself. And another kind of asset or asset class that we are giving a forecast on are the ETFs, the ETF from US ETFs actually, and we can see different time frames also here. And this is helping us not just picking, the right stock, just also being in the right sector is important as well. And then you can actually choose stock from a specific sector. For example, the algorithm not long ago, almost 1 week ago, in the 11th of December, decided to focus on KBE. KBE is regional banks in the US. And we saw the magnificent performance that it made in 3 days, almost 9%, as we can see here. Also, home builders, XHB was one of the favorite sectors that we can find here. And even in the longer time frames of 7 days that we can see here, FAS, for example, was one of the leading assets that we can see, or leading ETF that the algorithm gave for 1 week period. FAS, it's the financial sector that we all know. And again, we can see the home builders, you can see different variety of sectors and ETFs, such as the XRT, the retail, and small caps in the Russell, and different interesting ETF to invest in. And of course, we can see the comparison to the benchmark, the S&P 500, still the average is better in each and every forecast here. And the 1 year as well, we have the longer time frames. We can see which sector the algorithm focus on, or told us to focus on in the last few years. You can see in the last year, and you can see again the financial markets. You can see TQQQ. We can see XLK, which is the tech sector, and other suggesting sectors that we can see for 1 year period in this specific universe. But again, not always everything is going to the right direction. The algorithm have some mistakes, as we can see here. If we can see an X on the accuracy side, it means that the asset went to the wrong direction. But the majority of asset that was recommended performed well, and that's what we are hoping and looking for in our forecast. Of course, besides beating the S&P 500 benchmark. And I want to introduce to some of you, which doesn't know it, very interesting universes, the level 1 and level 2 in the S&P 500. Those specific assets are combining from two levels. The level 1 is the 11 main sectors in the US market, basically in the S&P 500 market. I think that we all know them, such as the energy, which is XLE, the finance, XLF, and of course the tech, XLK. We all know that big sectors that have been led in the S&P 500. And beside that, we have the level 2. Level 2 it's referring to 25 industries that belong to those level 1 sectors. And there we can find XSD, which is the semiconductor or the software or the home builders, regional banks, capital market, and many other industries that dividing all the stock in the S&P 500 or in the US market basically into categories of those level 2. And on top of those two levels, we have a forecast. Again, forecast as well. It's basically used by our institutional clients, hedge funds. They're really fond of those forecasts because hedge funds, look, they specifically want to be in the right sector. The most important thing from the hedge funds or institutional clients is being in the right sectors. If I'll put them there, they'll manage with no problem. This is one of the hedge fund that told us before. Just put me in the right sector, and I'm successful from there. And we can see that their algorithm is actually giving us the best sector to be in long time frames, short time frames, and we can see it in those forecasts. To the left, we can see the level 1. The 11 forecast that I talked about before. So we can see, for example, from the 14th of November, XLK and XLF was the most recommended sectors to be in, the tech and the finance. And if we're looking at the right, we can see a level level 2 forecast. Here we can see XAR, which is aerospace and defense, and XSD, which is the semiconductors, is actually with a really nice performance for 1 month time frame. So from those actually to level 1, level 2, we created strategy. But I want to give you a few examples how did we the timing of those specific sectors as well. And we can see here in the November 14, KRE was one of the regional banks, was one of the leading ETF, leading level 1 sectors that the algorithm loves. And we can see the performance in this specific universe of KRE, the regional banks. It's actually, we're going to see it in today's forecast. It's actually still recommended for the next months as well. But this is from the last month, and we're seeing here the performance of this specific industry in this graph, in this chart. So I want to jump and to a new exciting, I think, issue, which is the strategies that were made. It's automatic strategies that based on artificial intelligence, of course. And I give you a short example of how we use the algorithm to generate systematic strategies and how they perform in the market. And we even can see a quick pick for a live portfolio that we're managing for institutional clients, and see what was the performance in the last month. What are we seeing here is just a small chart of the importance of the predictability level. I won't get into that. We're going to see a few more strategies right ahead, but just to you to understand the importance of the predictability, we can see here the same strategy. All the lines that you see here are the same strategy, but using a different predictability level of stocks. So the blue line represent the most predictable 50 stocks that we use for this specific strategy. That has, I mean, the best predictability level. I remind you, the predictability indicator is the one that's in the left bottom corner of each and every asset. I'll give you a quick reminder. This, what we see here, for example, the 0.51 in XAR. This is the predictability level. So here we are focusing on the best predictability stocks, 50 best predictability stock in this strategy. And the green line that you can see here are the worst predictability. I mean, it's the last predictability level in this strategy, and we can see the performance are really different from the best predictability stocks to those ones that are not such predictable stocks. So try to focus when you're choosing stocks, try to focus on the most predictable stocks. And we have several strategies that we developed. I'm going to go through some of them. I think it's going to be interesting, not just for the individual or private clients, also for institutional clients if we have them in our audience. But I think it can everybody can find interest in them.
Then before we drilling down into the strategy, maybe let's go over, like, I will choose one question, just a moment, and we were going to answer the rest at the end, right? One question that I see, again, someone is asking if you can explain exactly what is the difference between the signal and predictability.
Yeah. The signals, again, is the number that we see in the square, inside a square, that's actually located here, as you can see here. And that's represent actually the predictive movement of every asset or every stocks. And it's an internal index that we are using it internally, of course, that moves from -infinity to infinity. And the bigger the signal is, the bigger the movement that expected from that specific stock. Again, it's not a price target, it's not points, it's just our signal that connects between all the assets that we cover, and actually help us to compare between assets such as that we see here. For example, if you want to compare between level 1 assets, we have the same signal to compare them. We know which one of them is the best, or which one of them is predicted to move the hardest from all, or from higher than from all. So this is about the signal. And the other one, the one to the bottom left of the square, the second indicator is the predictability indicator. And again, that moves from -1 to 1, as I said earlier. We are looking again for the highest predictabilities numbers here. We want to find the biggest, the highest the predictability is, the better is to be in the stock. And it moves from -1 to 1, and 0 represent around 50% probability that the asset will move to the predicted direction. And also, we always want to focus on the most predictable asset, and see the importance in that indicator in many forecasts.
Yes. Okay, let's continue.
By the way, if you want to see further information about the signal and the predictability, you can find it in the website. We have some videos and explanation about those two indicators. So let's jump into the strategies. We can see a few strategies here. A high performance strategy. One word before I'm starting to reviewing them. All the strategies here are taking for it's a 3 years period, started from 2020 up until 2023. Most of them up until September or July 2023. All the stocks that we see here are taken from the S&P 500 universe. And let's dive into it. The high performance strategy here, the main target, or the target of this specific strategy, is making high returns by using 50 stocks. We have a monthly rebalancing. We rebalance the portfolio once a month, and checking it, of course, the algorithm checking it every month and choosing the best 50 stocks to be in for the following month. We can see that this specific strategy made 370% in 3 years, while the S&P did 33% in a parallel time frame. To the right, you can see a low risk strategy. That the target of this specific strategy is keeping a low drawdowns all over the 3 years period. It's not about finding the best returns. It's minimize the risk as much as we can. This is really interesting strategy for the institutional clients that's looking for a safe return, or safe return as much as we can. We have the long short SPY strategy. Here the algorithm is actually suggesting us doing long or short on the SPY in each and every rebalance once a month. A month is telling us if to long or short on the SPY ETF, and that's the performance of this specific strategy. And we also have a long short sector strategy, sector industries. The ones that I talked before about level 1, level 2. We're going to see a really interesting strategy that's focusing just on those level 1, level 2 assets, no stocks, just holding, for example, a sector once a month. We're gonna see it right away. I think it's the most interesting one. And this actually made 484% in 3 years. I know it sounds a lot, but we're gonna see again what happened this month and the performance of this strategy in November, when the market actually went up. And we can see how the algorithm can focus on the best sectors to be in and the best stock to be in those strategies. So we're going to start with the first one. This strategy is kind of basic strategy of just choosing the best 40 stocks each and every month. To that, we are adding a 10% industries to best industries. And if we have to go short, we're just buying the SPY. So this strategy actually not holding any short positions. And here we can see the performance in 3 years. We have 127% in 3 years. We can see the drawdowns here in the tables. The blue line is our performance, the I know first strategy, while the orange one is the S&P performance. And we can see this is a glimpse from the live portfolio that we are managing for one of our clients. This rebalance actually happened on November 15 this year, like 1 month ago. And we can see the stocks that the algorithm picked in this specific month, and we can see the returns in the unrealized return, which you can see here to the right, and the different weights that we give to each and every stock. Of course, the weight is being distributed by the predictability level and the signal level of each and every stock. So we can see the return in this month for our portfolio was 7.1%, while the S&P 500 went to 3.13%. By picking the right stocks, we again actually succeeded to outperform the market, and not just by 1 or 2%. It's we more than doubled the S&P return in this specific month. And again, those stocks are taken from the S&P 500 universe. That's what's I think it's amazing, because we're beating the S&P itself by picking the best stock of the S&P. It's like it's a new S&P upgraded S&P index that the algorithm picks the best stock to be in. I'm going to give you a quick review on the level 1 that we talked about. Remember the 11 most the 11 main sectors in the S&P 500. We can see that actually made 254% in 3 years. And you're probably asking in which sector we held in every rebalance. So we can see it right over here. And we can see actually that in the beginning of 2020, the algorithm chose to focus on XLF. That means it just bought XLF ETF for that specific month and didn't buy anything else. And then if we're seeing a red arrow, that means that the algorithm decided to went short on this specific sector. And we actually shorted the retail universe, as you can see, not the retail, so the real estate sector, as we can see here. Then we went long on XLK, the tech, long on XLF, and XLF, and XLI, and XLF to the rest of the year. And we can see it in every year, which in each rebalancing, which sector the algorithm decided to focus on in this specific chart. I think it's really interesting because it knows where to be in every month and every rebalance of the year. We can see also in 2022, which was a pretty volatile year. Again, the algorithm outperformed the S&P 500 by choosing the right stock, by shorting actually, for example, the healthcare sector, and then shorting the consumer sector, XLY, that we can see here, just by buying one ETF every month. I think it's pretty amazing. And of course, in 2023, we can see that XLK, that the one that the algorithm decided to focus on in the beginning of the year. And then we can see that he decided to short the XLF, the finance sector, as Yaron mentioned earlier. He actually shorted remember that we saw that all the banks that the algorithm shorted. So we calculated that into a sector, and we can see it shorting the XLF was really profitable on March this year. And this goes on, and we can see here it's a basic chart of how many times we actually outperformed the S&P 500 by each and every rebalancing. And this one is the live one, which actually happened again in November 15. The algorithm chose XLI, the industrial sector, to be the favorite sector of this month, and again outperform the market by focusing on the right sector, doing 5.2%, and the S&P was in 3.13%. And just by choosing one sector, this is a live portfolio actually, that again, the rebalance went on November 15. And
One quick, before we were drilling down into the level 2 strategy, it's important to say this is a low latency portfolio. All the positions actually and the rebalancing is done once per month. The algorithm is deciding whether it's a risk on or risk off market, whether we should be exposed to the market or whether we should stay out of the market. And if the algorithm deciding to go long, is picking also the stocks. It could be 20 stocks, it could be 40 stocks, it could be sectors only, level 1 sector, or level 2, as this interesting example that Ben is going to share right now.
All right. So yeah, this is focusing on the 3 best industries for again 3 years. In this specific strategy, the algorithm is not just picking the best level 1 sector as we've seen before. It's focusing on 3 best industries, to long or short. In every rebalance, we can see here, and I chose some specific cases. I won't get into everyone because each and every one of them, because there's a lot, but just the one that we actually outperformed the market and made a pretty big gap. And we can see, for example, in the beginning of 2020, the algorithm shorted the retail, the real estate, and telecommunication sectors or industries, and made that significant return. And we can see it also in 2021. The algorithm knew which industries to be in this specific case to be long, or this specific to be also in a long position on the KBE, XOP, KCE. And in 2023, we can see here the short that we talked about it. We can see the insurance company, we can see real estate, and we can see the banks that the algorithm shorted on March this year. And this specific, again, strategy, we can see the live portfolio that ran from November 15. The algorithm decided to focus on XHB, the home builders, KCE, the capital markets, and the semiconductor XSD. And it's not just focusing on the best sectors, it's also giving them different weights. And you can see that the biggest weight came to the home builders sector and made the biggest return from this 3 sector that he focused on, and basically made 8.3% in this specific months. And so it's really interesting strategy, and I'm going to show you just the last one. I think it's also interesting is the take profit strategy. In this position, the hedge fund that asked for a specific strategy wanted to beat the market. That was their main target, just beating the S&P 500 every month. And we created a strategy that if we're taking a 1% more, if the portfolio is 1% more than the S&P, we are selling the positions and buying the S&P to the rest of the month. And we can see that strategy gave us 150% in these 3 years. But I think that the most interesting thing in that strategy, that we almost outperformed the market 41 out of 52 of the times. And so in 52 rebalancing, 41 times we actually took profit and went out of the market. We can see a few examples. This is the yearly return. You can see the return in each and every year. If you look at 21, 22, and 23, beat the S&P each and every year. And here we can see the amount of times that we actually took profit. When you see the 1 figure in this table, that means that we took the profit and went out of the market and sold the position. We can see that, by the way, in the beginning of the in 26th of February, and that happens pretty quick. On the 27th of February, we already sold the position and went out from that strategy. This is the date that we sold the portfolio and took profit. So that's another interesting strategy. And we can see also the live portfolio that actually took place again. Started in November 15, and the take profit was in November 30. We closed the position in 44.44%, but the SPY, and then we are bidding hit until the end of the month. So really interesting strategy, not focusing on making high returns, just focusing on bidding the S&P 500 each and every month. And again, strategies can be customized by the demands of the institutional clients. So if you're interested in those kind of strategies, please contact us, or you can even contact me separately. This is my email. Send me and I'll reply quickly as I can, or you can do it by the website and find our mails for that issue. All right. We have different kind of packages. As Yaron mentioned in the beginning, we have different asset classes, from cryptos, from currency, commodities, ETF that we saw, stocks. Our universe is very large, and we have a lot of asset classes. One of them is the cryptocurrencies, which are making a really interesting movements in the last month. And we can see again that the algorithm can focus on the best cryptocurrencies, as we can see here, for 3 days or 14 days. And this is a very volatile world, and making a volatile returns, as we can see here. For 14 days, the algorithm was able to make 162% in average in the cryptocurrency package. Again, those packages have higher risk level because the cryptocurrencies has higher risk level as an asset. But again, it's still pretty shocking to see those returns in 14 days time frames. So again, the algorithm is picking out of more than 75 pairs of cryptocurrencies that you can find in this package, a very popular package that we have. And I think it's an interesting time to be in the cryptocurrency market. And Yaron, you want to talk about this?
Yeah, and also there are some hedge funds that focusing on ESG investment, basically. It's relevant for hedge funds, also for investment houses. And basically, it's another very good example to show or to demonstrate how it's possible to customize the daily prediction based on the strategy of each investment house. Here we can see a very interesting customization when we're focusing the investment universe is based on basically Barron's top 100 sustainable and responsible companies. Basically, it's an ESG investment universe, and the algorithm is screening this universe, learning the behavior of the different stocks within this universe, and identifying the best opportunities from this interesting investment universe, basically.
Yeah, and we have other packages as the indices forecast, which I think is pretty amazing. I talked about global intelligence to the markets that we're providing. So this package is providing, I think, the best intelligence for the market that you can have. It's actually have more than 175 world indices in it, and it helps us to focus on the best indices and know the best trends of the US market and the global market. As we can see here, for example, you can see the semiconductors or the KRX, the regional banks, Russell 2000, and airline companies. I think it's a really interesting package. We have interest rate packages, again, commodities from wood, from natural gas, oil, and any other commodities that you're interested in. More than 85 commodities, tradable commodities. We also have the currency forecast, again, majors or exotic pairs. You can find them all in our currency forecast. And again, different regional around the globe, as mentioned before. We have more than 50 stock exchanges that that are providing a forecast to. If it's the Canadian exchange, the European stock market, UK, South Africa, Italy, Saudi Arabia, Australia, and many, many more area around the globe. Hong Kong and the Chinese market as well is one of them. And also providing to one interesting country around the globe, the Indian market, which we have a big collaboration there that was launched a few months ago. In that specific company, we collaborate with one of the biggest brokerage firm in India, which gives the algorithm to our 100,000 investors to focus on the Indian stock exchange, choosing stock from the Indian stock exchange, and they have the algorithm picks and the AI picks in their own platform, as you can see here in the middle, and the traders can pick the best stock that the algorithm provides them from the Indian market, if it's a large cap stock, mid cap, or small cap, and 6 different time frames. Really successful collaboration that we are really proud at. And so I want to talk about what we had in the last webinar. I don't know how many of you been in the last webinar, but the ones that been there, and I saw a few questions, how do we know if it's true, or maybe you picked the time frames of the forecast. So I present you here the last forecast that we gave in the webinar, and what we're going to do in this specific webinar as well. But this what happened actually from the 26th of sorry, from the wait, I'm on the right page. Yeah, I'm on the right page. That's what happened actually in the November 26th, when we have the last webinar. The algorithm actually, we are actually telling what was the best sector to be in level 1, and what's the best industries to be in level 2. So I present here the actually performance from those days, from the 26th of November, when we told you to focus on the tech sector and focus on the software and service and the aerospace and defense. That was the best industries that the algorithm showed us there. So we can see actually the best industry was XSW, which was software services, that made almost 11% in less than a month. And we can see XLK, the tech sector, and the XLY, that was the best here, also making 4 and 6% in less than a month, and of course beating the S&P, which again, that's the main target, beating the S&P. And also I mentioned in the index forecast about what the best index to be in and what's the best asset to be in the next month. And one of them, the leading one, of course, was the SOX. The SOX, it's the semiconductors forecast. Sorry, this is we can see a frame from the last webinar. This one was represented in the last webinar. As you're going to see in a few minutes, I'm going to do it to the future as well, to the next month. But this was what we are published on the 26th of November. We focused on, as you can see here, AGX, which is the housing sector, and we told that it looks strong, made a phenomenal 14% in less than a month. We talked about the Russell 1000, we talked about the Russell 2000 and 3000. We talked about the regional banks, KRX and BKX, which looked pretty good and was in the top part of the forecast, and made the 16 and 18%, and again less than a month. And we also talked about the part on the red part of the forecast, the asset that was supposed to go down, and we can find there the VIX and the VXN in the bottom of the forecast, which has the higher signal, as we can see here, highest negative signal, and the predictability, and also those assets went down during those months. And of course, the OS6, which is the oil services, we saw it in the red part of the table. The signal wasn't that strong, and still it went down by 0.6%. And that's what we recommended you in the last webinar.
By the way, before going to the future, in the previous slide, it's interesting to see also the negative prediction that the algorithm add to the energy. We see on the left side, we see XLE, the energy sector. On the right side, we see XOP and XES, and those three sectors or industries went down since this prediction. So it's a very good idea to follow and to monitor the strongest signals for both the positive signals and also the strongest negative signals, and to get a very good AI-powered understanding of the market during the next weeks.
Exactly. It's not just where to be in, it's where not to be as well. It's important. And we saw that the energy sector was not that good. And let's talk about the future. I think it's the part that everybody waited for. What the algorithm sees for the next month. We have it in level 2 and level 1, level 2. And this time, of course, if you're buying the specific forecast, you can see the entire forecast. I just took the first ones to keep it mystery. But we can see that in the level 1, we have the real estate. XLRE is the leading level 1 sector. Actually, the real estate made a really significant return in the last few weeks. And we can see again, XLK is getting into the second place after the real estate. We still see the energy red and in the bottom of the forecast. And if we are checking the right side of the forecast, we can see the best industries, and the semiconductors is here. The KRE, which is regional banks, is here, and the home builders, XHB. Those three looks the best sectors to be in the next following month. And in the red part, we can see XOP again. It's oil and gas, which present the energy sector is still red and doesn't look that good in the nearest future. And if we're having a larger picture or getting checking the indices forecast, we can see again another interesting things here. We're seeing the KRX is actually leading the forecast. It's better than the SOX right now. It has a high signal, but we need to keep attention and see that the predictability level is lower than the SOX. So if I have to choose between those two, I would focus more on the semiconductors, the SOX, because it has pretty much similar signal, but the predictability level is much higher. We can see the housing sector again, still remaining pretty high and being good for the next month. We can see BKX, which is the Nasdaq regional banks. We can see XAL, which is the airline company, still looking good, but it's important to mention that it's kind of volatile index. It can move up and down really quickly, but it looks good, and it made a significant return from the last 2 weeks that we also recommended it for long. And we have the best index from the US market. We can see here Russell 2000 RUT. You can see it in the third row here. And again, real estate RMZ, it's the MSCI REIT index. And those are the main ones that are in the top of the forecast. You can find the Nasdaq actually here, Dow Jones here, and we can see European banks and S&P 500 in the middle of the table. I cut it to half because it was too long. And here we can see the red part of the forecast, and we can see the TNX and VIX. The VIX, the volatility index, of course, is in the bottom. TNX, it's the interest rate, 10 years government bond interest rate. We see it in the red part of the table, which is good for the stock market. You can see the oil services, OS6, are still here. It's actually going hand in hand with the XLE that we saw earlier, that the energy sector is not looking that good. And the 5 years interest rate we can see here in FVX. Again, another energy XOI and HSI, for example, it's Hong Kong. We also see those in the red part of the table. So if we are summing it up in a forecast level, the regional banks, the semiconductors, housing, those three looks pretty good. Also in level one, also in the index level. And for that, we are giving to the special holiday sales for everyone that's in this webinar, specifically for the people in the webinar. We're giving you two options. The first option is actually 30% off from all the packages that we have in our website using our coupon. The coupon is 2024. Before buying a package, just type in the coupon. You can see it to the left, and you get the discount of 30% off for each and every package. The other option, which I think is more interesting, is a 1+1. You can buy two packages for $2.99. Actually, you just picking one of the package that you want and combining it with another package. For example, taking the ETF package that we saw that was really interesting, and taking the top 10 or top or the technology or the home builder package. We can combine those two and have not only just stocks to focus on. You can focus on interesting sectors. You can combine the cryptocurrency package with the tech package, for example. You can do many interesting combination there, and it's for the next 12 hours actually that we giving that special sale. And those two options are available in our website. I think Yaron is putting a links for those sales in the chat as we speak.
Yeah, it's already on the chat. So guys, just open the chat and the link is available. It's not available right now on the website. It's just available to the people that are attending the webinar. It's exclusive for the webinar attendees.
So if I would recommend your packages, according to what we just saw, we saw the semiconductors was a pretty good place to be in. We're seeing the tech is a good place to be in, and we saw the home builders and regional banks, the financial sector. We can choose, you can choose packages from those specific sectors. Checking, for example, financial sectors and home builders, and I think it can make a really interesting results in the next month. And so again, those two options are available. The first option is a 30% coupon that gives you 30% off the prices of the packages from any packages. Or if you want to combine two packages from different investment universe, you can do it by option 2. and picking two packages that you're interested in. And I think we can
Yeah,
answer.
I like let's start answering the questions that we have in the Q&A. But if you're asking me, Ben, yeah, I think the ETFs is a very good package for this month. Also, the S&P 500 stock picks. But since we saw the Russell 2000 so high in the prediction that you have presented, we can also explore some small caps, I believe. December, as we said last month, December is usually a very good month for stocks, specifically Russell 2000 stocks tend to jump during this period. But of course, we need to remember the risk level is higher with those stocks, so we need to take it into consideration. So my top three, let's say, for this month is the top 10, the S&P 500, and also the small cap stock picks. Let's start to answer few questions.
Yeah, sure.
Okay. Okay. Someone is asking what is your two packages. I think we have already answered that. Okay. Someone is asking whether it's what they should expect after signing up, whether it's a daily prediction or weekly prediction or monthly prediction. Can you clarify that?
I guess, sorry, I can't hear you. What did you say again? I can hear the question.
Yeah, I see here one question regarding whether the service is based on daily forecast, monthly forecast, or weekly forecast. What they should expect after signing up.
After you're signing up, it's a daily forecast that's sent to you. You have 6 time frames on a daily basis. It means that every day you get the best stock for 6 different time frames, from 3 days, 7 days, 14 days, 1 month, 3 months, and 1 year. And you can pick the best stocks out of those time frames. As I mentioned before, focusing on best signal and best predictability indicators. Those two are extremely important, and focus on the best predictability levels. That's how you should get it. Focus on longer time frames, and try to find stocks that are in multiple time frames. If you see stocks that are starting, let's start from the long time frame, from the 3 months, 1 month, and then it also appears in the 2 weeks, 1 week, and 3 days. That's usually a good recipe for success. If the stocks in multiple time frames, it means that the algorithm sees growing and getting big, better and better during the time. And of course, considering the predictability indicator that we mentioned earlier. I see actually another question about the strategies. Someone asked about the take profit strategy, that if we made this 1% more than the S&P, maybe the S&P could won over the month. But as I mentioned, if we are checking, if the portfolio made more than 1% than the S&P, we are selling the portfolio and buying the SPY itself. So it cannot beat us up until the rest of the month, because we are buying the SPY, and we keep this gap of return about 1 and more percent. It's not have to be just 1%. It's if we have 1% or more above the S&P, we are locking the position, buying the SPY in all of the money to the rest of the month until the next rebalancing, and by that winning and outperforming the S&P. And let's see any other question that we have.
Yes, there is additional question about the options package. In the option package, basically the investment universe is based on stocks that basically have options that you can trade options on them. And basically you can utilize artificial intelligence over this specific universe and to identify opportunities. Of course, the trading and the risk management is done on your side, basically. Someone is
I see
asking if
a lot
it's
of
possible.
questions.
Yes, there's a lot of questions. Someone is asking if it's possible to get customized prediction based. Is it possible to get a customized forecast based on my own portfolio? Yes, it's possible. Basically, all the annual subscriptions include this option for free, basically. So just send us an email and we will send you more information about that. There is a question about, do you want to answer any question, Ben?
Let's see, something that we didn't answer already.
Yes. Wow, there are a lot of.
Yeah, but I think we answered more. This asking if we are using the tool by ourselves. For example, I'm buying options, by the way, a long-term options from the algorithm. I'm taking the S&P 500, by the way, forecast, and check the 1 year forecast, the 1 year time frame, and I'm buying a long-term options, call options. This is how I specifically use it. But we also have a lot of collaboration with hedge funds that we do and invest our money in with them as well. So this is one of the ways.
Yeah, and another yes. Wow, a lot of questions. Someone is asking
Yeah, they're asking
whether
if there's a difference if subscribing to us and the Shunya, which is the Indian brokerage that we are collaborating with. Yeah, there's a difference. Shunya collaboration is only for Indian stocks. We have packages for the entire from a lot of the investment universe, and if it's the U.S. stocks and the packages that we saw from every big exchange in the world. So yeah, there's a difference.
yeah, someone is asking about if there is any commitment that comes with the subscription. There is no commitment. All the subscriptions are without any commitment. You can try it and see, and test several packages until you will find the right package for you. Someone is asking whether every day, if he received a specific ticker on a specific day, does it mean that he will receive it also tomorrow as the best opportunity that the algorithm is screening for him? And the answer is not necessarily. Every day, the algorithm is basically screening and identifying the best opportunities in the market right now. If you want to track a specific portfolio or specific tickers, you can customize, or we can customize the prediction based on your tickers, and it's another option that we are offering to our clients. Is it possible to get the prediction as a flat file? Yes, it's possible. Possible to get every prediction in the form of an heat map, as Ben demonstrated today, or to get it as a flat file. Usually, institutionals prefer to get it as a flat file, and it's possible, definitely. Any other question, Ben, that you? There are a lot of questions, but any specific one that you prefer?
I think we answer most of them. And of course, if you have any other question, you can write us down an email, and we'll be happy to answer it. You can write directly to me. I'd be happy to answer it. And I think again, those two webinar sales are pretty special. Use them. It's for until when those sales are?
24 hours.
24 hours.
Anastasia, someone has just asked why you never ask smiling. So please show us that you can smile. Thank you. And Anastasia belongs to our quant team, and she's going to participate in next webinars as well. Some closing words from your side, Anastasia. Thank you for joining us today.
Thank you for having me. This is the first I Know First webinar that I've participated in, and it was a blast. It was educational for me as well. I'm looking forward to the next one, and I hope everyone had a great time, and I hope everyone's questions were answered, and please shoot us some emails if they weren't.
Thank you very much, Anastasia, for being with us today. And thank you very much, Ben, for such an interesting webinar.
Thank you guys, and happy holidays to all of you. And I'll see you all in the next webinar. Hope I'll see you all in the next webinar. And thank you very much.
Thank you very much. Thank you for the kind words and the support.
Thank you.
Happy holidays. Thank you.
Bye bye.